Hi, it's Ian from PIA-First. It's Sunday, the 22nd of April 2018. In this video analysis, we're going to be looking at firstly the dollar index and then the FX majors, highlighting what chart formations we're seeing this week and what medium-term trades we're looking at, and obviously updating on also our live trades. Firstly, we start with the dollar index. This is the 8-hour chart. Now, we've seen some pretty mixed and volatile trading since the beginning of March. This whole move, if you like, this bearish channel formation looks corrective. Saw a rally, continuation of the rally on Friday, but we have stalled at the trend of lower highs, and we're looking for a dip lower at the start of the week. Hard to tell at the moment how sustained the correction lower may be. There's scope that we could move all the way down to here, which is 88.82, but throughout the week we're going to be looking at buying dips in the dollar, intraday dips in the dollar, until we see a solid reversal. Obviously, if we get a daily break and a close above this level, which is at 90.47, then this whole corrective formation is probably complete and the dollar is going to continue to move higher. Looking at the majors, euro dollar I think is probably the one major currency at the moment which is hard to predict. We've had very mixed volatile trading for the last 56 days. That's either formed a corrective channel formation, which is the purple lines, or a symmetrical triangle formation. Both of these patterns do have a bias to break to the upside, but with that outlook in the dollar, any break to the upside is probably going to be limited. In fact, if we look to the RSI, which is the relative strength index, we can see that basically since sort of the 10th of February, we've just been moving around this 50% level, which is the midpoint of the RSI, the relative strength index, and that's a pretty good indication that we're in a non-trending sequence. So the immediate bias is slightly bullish. We've got some bespoke support at 122.49. We did bounce pretty close to that on Friday, and there was an exhaustion count on DMARC, which is a 13 count on the intraday chart. The first resistance level going into next week is at 123.45, so we'll be watching that for price action reversal formations around that level. Sterling dollar is looking quite good. We missed our medium term sell trigger by, I think it was 2 ticks last week. We had a trigger to sell sterling dollar at 143.80, and it actually made a 143.77 high. If we look to the weekly chart, this looks like we've completed a bullish Elliott wave formation, so 5 waves to the upside. If we put an RSI on here now, we're going to see some bearish divergence. So bearish divergence, so the chart has made a higher high, the oscillator has made a lower high, and that's sometimes a very good indication that that this rally has come to an end. We've also got a bearish outside week, so this candle has completely engulfed the candle, the previous weekly candle, and that is also a good indication that a top is in place. However, going to shorter time frames, and we're going to look at the 2-hour chart. Here we can see this strong sell-off. We've pushed through this 161.8% extension level, but we've got 2 bespoke support levels this week. We've got 139.84 and then we've got 139.29. We've also got an 11 count on the intraday chart, so further losses are likely to be limited, and then we're likely to see a correction to the upside. We don't think that we'll break the previous high, and so the medium-term outlook will still be bearish, and we'll be looking to sell into rallies over the medium term. Dollar Swiss has been quite a hard one for us to call. We're actually short in this major currency pair at 96.84, which is actually our monthly resistance level. So at the moment we're buying dips intraday, but if we see a monthly close below 96.84, and obviously that will be the end of this week, then the bias flips to the downside. Trendline resistance is located at 98.13, and then we've got this 78.6% pullback level at 98.57. Dollar yen, which if you watched the video report last week, was one of our favored pairs, and we were actually looking at most of the yen crosses. We've triggered a short trade at 107.75. We've got bespoke resistance at 107.80. Friday we saw a rejection of that level. Again, if we go to the RSI, I think it's pretty likely we're going to see some divergence here. So again, chart makes a higher high there. The oscillator makes a lower high. We're assessed as being in a ending wedge formation. If we can break this level here at 107.28, then the measured move target is going to be around about 105.70. Even if we look into shorter time frames, and this here is just a 30-minute time frame, there is scope for maybe just a small rally up at the start of the week, but we're looking for that to potentially make a right shoulder of a bearish head and shoulders formation. A break of 107.52, measured move target takes us down to about 107.20. Dollar CAD, an aggressive move to the upside. It's broken through a head and shoulders, a bullish head and shoulders formation. The measured move for this time frame is here, which is 128.09. We've got bespoke resistance at 128.05, so we're looking to actually take some profit on our long trade, which we're actually long at 126.30 on our medium-term call, around about here, and then we're going to look for a potential reversal with the previous high located at 128.20. And then this 423.6% extension level at 128.32. Commodity currencies do have a tendency to run to this Fibonacci level, so we'd look for the upside to be limited this week. Medium-term bias has flipped to the upside, but I think we're going to see a correction lower to offer better entry levels for a long trade. Aussie dollar, longer time frames are pretty mixed, but shorter time frame we highlighted a wedge formation. We broke out of that. We've had a very aggressive move to the downside. The measured move target is the start of the wedge, which comes in at 76.52. So it'd be pretty unwise to sell Aussie dollar at the start of the week. And again, we're short of Aussie dollar at 77.70 on our medium-term calls. Intraday time frames, 77.20 is quite a good resistance level. And if you look back over past price action, that's been previous resistance and previous support. So short, at the start of the week, we're looking for a potential bounce up to this sort of level to again get short on our intraday basis. Like I said, we are short at 77.70 on our medium-term calls. Euro sterling, we've had let's just get rid of that. We've had a quite choppy, mixed, volatile move to the upside. This could either be seen as an expanding wedge formation, but it's not really that aggressive, or a bullish corrective channel. Now, we've got bespoke resistance located at 87.94, and again, the reason that I've highlighted the RSI here is because if we do get up to that level at the beginning of the week, then I think that it's very likely that we're going to see some bearish divergence again, and at least a correction lower. One thing that we should note on euro sterling is that this price action last week did produce a bullish outside week. So the medium term outlook is pretty mixed at the moment, but the immediate bias is still bearish. Euro yen, and we're short in euro yen, I think around 132.50. I'll have to check that. Let's have a quick look actually at our dashboard. Euro yen, 132.70. We're short of euro yen at the moment, but again, there's no clear real indication that this correction is over. We've got bespoke resistance at 133.40, and we've also got a 12 count at the moment on the 4-hour chart, of 13 counts exhaustion. So we're quite happy to hold our short at 132.70, but there is scope again for a move maybe to 133.40 before we continue with this sell-off in euro yen next week. Okay, if you have any questions, please feel free to post them on the blog, and we'll endeavour to answer them for you. All the best of luck with your trading this week, and we'll give you updates in video format on Wednesday and again on Monday next week, and we'll keep on updating the medium-term outlooks in written format throughout the week. Okay, best of luck. Thank you very much.